New home sales figures due to be released today. Our next guest says we're not going to see such a dramatic drop from today's data. David Resler is with us now. He is the chief economist at Nomura Securities. He is a Bloomberg best on housing. David, always glad to see you. So we're not going to get as much theater, drama, tears today as we did yesterday.
No, it was already there a couple months ago in new home sales. New home sales are registered at the time of a transaction. So when the home buyer's tax credit ended at the end of April. April was the last month that picked up the new home sales effect. So, in existing home sales, which we saw yesterday, that effect doesn't show up until the transactions close. So we'll be still seeing some effects of that for a couple more months.
So are you above or below consensus as far as what you think is going to happen just today?
I think we're probably pretty close to consensus. We think that we've seen the bottom and that we're going to be bouncing along low levels for a while before we see a sustained recovery in the housing sector.
A lot of people have said or pointed to the statistic, excuse me, in the past 8 recessions, housing has actually led the U.S. economy out 7 of 8 times. We've heard a lot of people say this time around housing is actually going to kill the recovery. Do you believe that, or is that too strong a statement?
I think that's too strong a statement. Housing is actually the leading edge of both the recession and the recovery. It's led the way into recession. It's led the way out. It's probably not going to lead the way out because we simply have households too heavily burdened with debt for it to be a big factor in the recovery. But it is going to turn around. After all, if we saw housing starts go from, say, 700,000 to 800,000, that would still be a very low historical level, but it would be a 15% improvement. So we have to bear that in mind.
To what extent, though, is foreclosure and this looming possibility that it's a much bigger factor than we realize now? I mean, is that your biggest X factor right now?
Well, it is a big X factor. Foreclosure ties up the property for a while. As long as the foreclosure proceedings are still ongoing, the housing stock can't move, and it also undermines the pricing in that neighborhood or that community. So it keeps people on the sidelines for a longer period.
Yeah, and sort of contributes as well to the inventory problem. And you're one of the few economists I've actually seen put in writing that some capacity is needed, because most people that we speak with and that when we read their research, they say inventory is the problem along with job growth, obviously. But you're saying we need to see more good homes in good areas.
Right. I mean, much of the housing inventory that we worry so much about are in places that people don't want to live anymore. I mean, we have whole sections of the Midwest where the deindustrialization is ongoing, and those houses probably aren't going to be back in the market owned by humans for very long, much more in the future.
So, I mean, would you go as far to say that's essentially skewing the data?
Yeah, I think it's obscuring what we understand about the stock of housing available for occupancy. A lot of it is out there, but we don't know whether or not people want to live in those areas. And I suspect, unfortunately, we don't have good data on quantifying that, but I suspect it's probably 10 to 20% of the total stock.
Okay, David, thanks as always. Always appreciate it. David Resler joining us there from Nomura Securities. He is a Bloomberg best on housing.